So today we're going to try answering the conundrum of the century: 50 basis points, 25 basis points, or nothing. And good morning, ladies and gentlemen. Hope you're having a wonderful start to your day. My name is Michael. Today I'll be your host, and today we're going to be talking about Jerome Powell, the man, the myth, the legend himself. And what is he going to do at Jackson Hole? It's going to be a fantastic time. Also, one of the biggest news days today on Wednesday for job numbers. And this is pretty scary, right? Why job numbers are coming up in the news, why the market is actually not doing as well as we thought it is today, the level that we have to pay attention to today to know if we're going to be bullish or bearish. And finally, we have the non-broken index unbroken again, back to neutral, as the joke ran for so long on this channel, where we said when this thing was cranked all the way to extreme greed, it was broken. The same way when it went to fear, we say it's broken because this thing is just a lagging indicator like no tomorrow, but we get a kick out of anyway, and that is the fear and greed index. However, if you guys actually want to know what the true fear and greed index is that we went over on the weekend deep dive, and that is VIX, right? VIX. I also posted a trade idea of 30 to 1 return. Before you all blow the comment section up, it is a long-term volatility trade used to hedge against market downturns in your portfolio. That is not to go YOLOing at the VIX contracts and basically saying, I'm going to go to a VIX of 40, make $1 million, and I'll be done. No, back it up a second. It is for you to hedge against your portfolio. So go check out that video in the link description below. And if you guys, while you're down there, wouldn't mind hitting the subscribe button and having bell notifications on. We will be streaming today, 7 p.m. Eastern, so make sure you have that bell notification on so you know when we are going live. We're primarily going to dissect the next article I'm going to show you guys in more detail, talk about how the market's reacting to the overall news, along with the jobs numbers that are expected to come out on Wednesday. We'll show you which exactly I mean by that. And just general market talk. Market actually wasn't doing too hot last night on futures. Took a short trade. I'll update you guys how that went. But looking at this, just seeing how the Nikkei, the HSI, all reacted today along with the S&P. We can go through that real quick. Nikkei looking like it's stamping out right here. Could be setting up another base to run. However, this could put negative pressure on the US market. Next, China got above the 50. Not too hot on the close. So we're going to have to keep watching this explicitly. We'll update you guys in the next video. And also we'll update you guys in the live stream where you can come ask us even option questions. I did a live stream for options. I know that's big on everyone's mind right now, of option contracts. And speaking of option contracts, guys, this is what we call the put to call ratio. For all those that don't know what that is, just think of a pendulum. You load up one side, what happens to the other? It falls off a cliff, right? Or it goes up. That's the put to call ratio. It's just basically a very, very good indicator of complacency and expectedness in the market. When this thing is extremely low, that means the market is calm, cool, collected, nothing is going wrong. No one's buying insurance. AK, that's what options are. It's essentially insurance that you can profit off of. Again, link down in the description below for that stream where I explain the basics of options. And also, I'll be doing those streams on Saturdays, so make sure you guys are subscribed so you get notified of when those streams, so I can answer your questions directly, right? Rather than having to scroll through all these YouTube videos about options and being confused, why don't you just come ask an option trader the question yourself and get a direct answer to you? That'll be every single Saturday. I'm going to be trying to do that. So make sure you guys have that linked in the description below and are subscribed with bell notifications on. Now, enough blabbing about options. This means that your house is on fire and you're like, I don't feel like buying fire insurance for a penny. You know, that's basically what it means. And that means that you don't foresee the house burning to continue, right? You're going to magically, everything's going to be fine, calm, and collected. This puts two things into perspective. The market can very run bullishly and subsequently it can continue to run. So we have to keep that in the context of what we're looking at and how things can play out. But also we do have the man, the myth, the legend himself, Jerome Powell. Central bankers diverge on rate path ahead of Jackson Hole. I did cite that we would see the first time we're going to get true rate cut, we're going to see descent. And we're actually going to get the minutes for the FOMC today. So that's going to be important, right? We're going to get meeting minutes at 2 o'clock today, 24-hour format. And also we're going to look at payroll benchmark. This is the one that we're going to be looking at. So 10 o'clock number and the 2 o'clock number, standard Eastern time, are going to be the ones that you need to pay attention to and know what's going on. Crude coming out as usual on Wednesday, but that's not really what everyone's going to be looking at. And then subsequently, we start the rigmarole with Jackson Hole, which is the synopsis, which is the Fed's meeting conclusion, right? That's really going to be important, but also some of these data points. But the true data point is going to be the Friday, and we're going to be talking about on the live stream what that is, what we think Powell's going to say. And the problem, like I mentioned before I digressed, is the Fed confronts up to 1 million U.S. jobs vanishing in the revision. Wow, right? So you noticed how the Fed pivoted, right, to I still see risk and upsides to inflation, kind of walking some of that job rhetoric back, but Bowman coming out, and this was pretty interesting. Wage gap remains above the pace consistent with our inflation goals. So like trying to walk back this narrative that Powell put out of jobs, right? Why were they so hyper focused on jobs? And maybe this article right here gives us insight of why they were hyper focusing on jobs specifically, right? We got Goldman Sachs and Wells Fargo. Economists expect more than the government preliminary benchmark revision on Wednesday to show payroll growth in the year through March was 600,000 weaker than currently estimated, about 50,000 a month. That would put the average job growth at 150 versus 200,000 roughly in the per month basis, right? 242 versus 158. That is significant weakening in the economy and could greenlight basically the, hey, we kind of screwed up over here and therefore rate cuts, right? I'm very curious to see how this right here is going to change. Right now we got 70-30. I expect this to be a dead 50-50 even heat once those numbers come out. And I will keep you appraised in the live stream of what is going on. So with all the news, as I say multiple times on this channel, it doesn't matter. It does not matter. It matters what the market is going to do. And we need to dissect what the levels are. We went over this in the weekend deep dive. So if you guys did not see that, please check that on the link description. So we're going to have the option live stream, the weekend deep dive, and the articles linked down below so you can check them out for yourself. And subsequently, the market didn't do too hot today. Last night. And it was in a range-bound area for futures. However, I was looking at more downside potential for futures. We're going to see how we open. 555, I reiterate again, is the S&P number that you cannot violate. You really actually don't want to even violate the low of the previous day of 557.40. The reason for that is now you established a high that didn't hold. So the threat of establishing a new low that holds is very, very risky. That doesn't mean sell everything. That doesn't mean go bearish. That doesn't mean go short. It is just a warning signal of, okay, our plan was that we're going to break out bullish. We've done that. Now we need to sustain that rally going into Powell, and subsequently we're looking at a higher potential of this gap fill, and thus we want to continue going bullish on the market. Even though I was short during the futures on the market, I was seeing small time frame potentials, right? We have to see how everything plays out. And as always, the NASDAQ as well for you guys. The level we need to watch on it is going to be 476.41, and actually the low of the day, 478.58. That is what we're going to be watching very intently to make sure that we don't violate that. Any breakage of 476.41 would spell us putting the bear hat back on and looking at bearish opportunities in the market. However, not full net long bearish. We're going to be looking at various opportunities in the market to see how it's all going to play out, how things are going to stem out. We have to be cautious with that one. And as always, we can always cover the Russell for the last but not least. Not looking too hot. This is what gives me concern that this rally may fizzle out. Why I took a bearish trade on futures last night, and I will update as always you guys how that went. But Russell filled the gap, so there's maybe some potential to calm down here, go sideways, but not necessarily go full on steaming ahead. However, as we see more and more bearish news coming out of Lowe's, right? So Lowe's had earnings today and they just did not have good guidance. However, as you can see, the stock doesn't necessarily react poorly to it, right? Lows coming out. And if I showed you this chart, you'd be like, just regular trading day. So it just emphasizes the point of news is not everything. Even though we're seeing the economy degrading, it does not mean it's the stock market, right? The two do correlate, but do not correlate. They converge and diverge from time to time. So the natural question is, which one is going to win out, right? I have my bearish theories on the market with the inverted yield curve. However, we are not uninverted yet. So therefore, I'm not going full bear mode on the market. We see lows coming out, not doing so hot. However, we did see semis kind of stalling out in this area, specifically NVIDIA. And NVIDIA, again, you want to continue higher highs. You do not want to break the lows of 123.52 because subsequently that will result in possibly retracement. We don't want to discuss that. We just wanted to keep going up and piling on that bear pain as we continue up higher. So that is what I will leave you with, guys, is trade the chart and do not trade the market as the economy. They're two different things. And also, just because Bitcoin is doing poorly does not mean that the rest of the market has to, right? Don't attribute one mentality to another. Come hang out with us on the live stream so we can answer your questions, and thus we can discuss more about this. I hope to see you there, and thank you all so much for watching, and I hope to see you in the next one.